Hey everybody, welcome to the Two Degrees podcast. I have had um actors on here, and just so y'all are informed now, this isn't just for industry friends and entertainment, but I also have photographers, I have metalsmiths, I have writers that are also going to join us. But today, I think, is a very crucial and valuable person to have on because this person is a mortgage specialist. So, everybody, this is Kale Olivier. What's going on, buddy? How are you?
Good afternoon, Podcast World X, Xavier. What's going on with you, brother?
Man, just chilling right now. I just had some brunch. Currently in Alabama, the south part of Alabama, near
Oh, incredible.
Mobile.
Okay.
So
Okay.
I'm happy that you're able to come on and talk because I think you have crucial information for just everybody because we don't get taught what you know, even though what you know is crucial to everyday living, pretty much.
Yeah, yeah,
Um,
yeah.
and it's like I think you have some valuable knowledge to share because we don't know how to go about, especially looking for our first home or being a
Hmm.
homeowner. Um, and I obviously don't know anything about that, which is why I decided to live in a truck and go on the road.
That helps.
Um, so like with that, I guess uh I'll just ask all the what I think are obvious questions to the unknowing.
Yeah. Hmm.
Because fact of the matter is I am also part of that unknowing crowd. Um, so yeah, tell us about Oh My Mortgage.
Absolutely. Yeah, so again, Kale Olivier is my name. I am exactly that, a mortgage professional. I've been in the mortgage industry now for about 13 years. So I started off essentially as a mortgage underwriter. So essentially that role entails I worked for, big bank in Canada like TD, Scotiabank, CIBC. Um, the people who look at mortgage applications and essentially decide based on the lender's guidelines if you're approved or not. So that's what I did for a lot of years. That kind of gave me the basis and foundation of how the mortgage works, how it's viewed in the lens of the lender, the person most important to the mortgage process. And then decided that I wanted to be more client facing. I'm a social guy. I love working with people, love helping people, love helping people. So I decided to move over to the broker side in 2010 and have been a broker ever since then, and have recently gone independent or started my own business as Oh My Mortgage. You can find me at Oh My Mortgage on TikTok, Oh My Mortgage on Instagram, Oh My
Imagine
Mortgages.
that being like
Hey,
the promoting platform. It's like don't find me in the pages. No, find me
yeah,
on TikTok.
2021, man, got to change with the times, you know.
Yeah. So
So
before
yeah,
you
I'm
continue, you
yeah.
said the term for you is a broker. What is the difference between a broker and a lender, or is that the same thing?
Okay, so yeah, so I'll break it down. So there's actually, so if we look into the broker world, as you mentioned, the proper term for me right now is a mortgage agent. There are mortgage agents, there are mortgage brokers. A mortgage agent is a person who is licensed, um, professionally licensed to um, lend advice about credit, about lending, about interest rates, about how the market moves, things of that nature. A broker is someone who can actually have a brick and mortar brokerage firm, can um, what's the better word? Hire mortgage agents and have them work under them,
Hmm.
right? So right now I'm not licensed. I'll have that by mid next year, April, May next year. I'll have my actual broker license where I can actually say, hey, Mr. Agent, come work for Kale.
Hmm.
Right now, I can only do that for myself. right?
Okay.
So that's the difference between a mortgage agent and a mortgage broker. In terms of a lender, so a lender is essentially exactly how it sounds. A lender is any financial institution that is willing to lend you money under the specific guidelines of the Canadian government fiscal, what they have outlined, right?
Okay.
So, there are banks, which are the obvious lenders, which everyone thinks that's exactly where you need to go.
Mhm.
And then there's companies, what we call mono lenders. A mono lender is essentially a company, all they do is provide mortgages. Whereas your bank will have GICs, they'll have deposit accounts, they'll have different other products. A mono lender is a company who only does mortgages. That's it. They only lend money. And that, for example, is First National is a mono lender. Another one is Equitable Bank. They just have a fancy title name, but essentially all they do is lend as well. So those are the differences between lenders, and then the difference between a lender and then, let's say, an agent, or an agent and a broker, right?
Okay. And
A
you're
lot of
an
terms.
agent, so you hook up us regular folk with lenders.
That's right. So
Okay.
essentially, the easiest way to put it is I'm the middleman, right? I'm the person who um, has studied, who continuously works with lenders and knows that world. And then I come to you and say, hey, I can put you together with this particular lender based on these particular things that you're looking for. Does this work for you? And if you say yes, then I go back to the lender and say, hey, X said he's totally okay with, the terms and conditions that you have offered him, and he's willing to move forward with you. So I bring the two parties together, and
Mhm.
then help obviously more on the client side move through the process. Because getting approved and signing a commitment with any lender is just the first step in, I want to call it, an 8 or 9 step process. So there's lots more that has to happen after you've quote unquote gotten approved.
So now, with your role, what is or what are a few things that like you as a specialist would not miss, that
Mhm.
if I were just to walk into a bank and say, "Hey, I want a mortgage," what are some of the things that you would be able to catch and facilitate?
Yeah, I break it down to the basics, especially with my new clients, first time home buyers, things of that nature. Everything is hinged and leveraged on your credit.
Hmm.
Okay. Credit score first, and then credit report activity after. So the first thing a lender is going to look at is, what is Xavier's credit score? Okay. Does it fit within our guidelines? Most lenders um, have a 680 and above. So they're going to look and say, is it 680? Wonderful. Then they're going to look and say, okay, what's on the actual report? Does he have, a car loan? Does he have a revolving line of credit, like a credit card? Does he have a line of credit? Does he have two collections items? Does he, has he filed for bankruptcy? All these things the lenders are going to look at to determine your credit worthiness. Okay. So when I'm talking to clients that are looking to, make a purchase on a property, the first thing I say is, okay, do you have, like, did you buy your dream car, $60,000 Range Rover, a $70,000 Range Rover? Because most likely you'll have $1,000 payment, and that $1,000 payment can literally knock off, $100,000 worth of mortgage, approved mortgage, right?
Oh wow,
So if you didn't have that payment, would you say you'd be approved for 400,000? With that payment, the lender's only going to give you 300,000. You get what I'm saying?
interesting.
And that can be, yeah, in Ontario, that's a big deal, right? Because
Hmm.
houses are expensive. So that that help, that means something. So I always tell people, first start with making sure your credit score is over 680. The best way to do that is to ensure, actually the major way to do that is to ensure that you don't have high limits on your, or high balances on your credit limits. For example, if you have a credit card for $10,000 with CIBC, and you have a MasterCard with Canadian Tire, that's limit is 5,000. You want to make sure that you're no more than 40% of the limit of the card. Okay, you don't want to go
Okay.
over 40%. Anything over that, the Equifax, they look at it as if you cannot manage your credit, that you're having a hard time with cash flow and managing credit,
Hmm.
right? So you always want to make sure you're under that, right? That's huge. That'll keep your score where it needs to be. With a higher balances, it actually brings your score down because, again, like I said, they don't think you can manage your credit. So once you establish, okay, I've managed my credit score, then you tell people don't make big purchases, right? Don't go out and
Mm.
use your credit card to buy a car. Don't go get a car loan. Don't go get a line of credit and use the entire balance. Don't do those things before you've bought in your first home. Keep all of
Really?
those. Yeah, because those will, again, those will affect what you'll be able to get approved for, right? That'll bring down, it'll literally bring down the price of the home that you can afford, literally, right?
But then what happens, like, so let's say I make a big purchase on my credit card, but then I pay that off. Isn't that's
That's
okay?
fine. Yeah,
Okay.
absolutely.
Okay.
Anytime you can pay off a credit card in full, absolutely do it. One, it reflects well on your credit report. Two, it takes away the balance, which would be uh, accounted for in your mortgage application if there were a balance, right? So
Okay.
you want to do yeah, you absolutely want to do your best to keep all of your balances down. A huge thing that I see with people our age is student loan debt,
Hmm.
right? Student loan debt there, and there's many ways to view student loan debt in terms of repayment. Some people have the forgiveness. Some people have put together arrangements with whoever's loaned them that student debt where they don't have to pay it in full, or they have, you know, they don't have to pay it for 3 years or something of that nature. A lot of people
Hmm.
have those kind of arrangements.
Yeah.
If you have that arrangement, that's fine. But if you're looking to buy a home, make sure you have the arrangement in writing. So whoever said, listen, you have $60,000 of student loan debt, but you don't have to pay it for the next 3 years, make sure they provide you with some sort of document. Because if not, the lender's going to say, okay, well, 3% of that balance is what we're going to use as a monthly payment, right?
Oh.
Right. So you're looking at like a $9,000 payment or something crazy like that, which will, again, totally throw off what you'd get approved for based on that huge amount, right?
Hmm.
So those are the things that people want to consider. Don't make the big purchases, right? Don't go get a car loan if you don't already have one, right? Don't
Hmm.
go buy a car. Don't run up your Amex. Don't run up your Visa. Don't run up your Mastercard. Nothing like that. And if you have a student loan, make sure you have some sort of arrangement of how it's being paid,
Hmm.
so the lender can see, oh, you only have to pay $100 a month based on this agreement with the person or with the entity who's granted them that student loan, right?
So because you
And
mentioned with paying off the credit card, Monique had a question where it's she was told that it's bad to um I guess like overpay your credit card.
no, it's not. It's never bad to overpay a credit card. It won't reflect on your credit report, right? That's the only
Okay.
thing. So let's say you
Uh
$1,000 credit card
yeah,
and you put $2,000 on it. It's not going
yeah.
to show the $1,000 credit. It's just going to show a
Gotcha.
zero balance, right? It's going to show a zero
Okay.
balance. So it doesn't reflect in a positive way, but it doesn't
Mhm.
reflect in a negative way. It's kind of
Now,
just
I was listening to Tiffany Haddish on a podcast, and she mentioned not, I think, to not pay like your credit card lump sum in one payment as well, to like break it up. Is that a thing, or am I
that's
misconstruing this?
that's a strategy on how to get your credit score up, right? How to kind of
Mm,
manipulate. Because your credit score is system generated. It's not a man on the back end saying, "All right, X deserves a 680. Oh, Monique deserves a 790." Right? It's literally system generated based on your activity, your trends, so on and so forth. So you can trick the system, right? So
mhm,
if you have $1,000 credit card, you've run it all the way up, and you want to, it's brought down your credit score and you're trying to raise your credit score as quickly as you can pay 50% on your payment date, right? So
mm,
so when the system looks at everything again, oh, he's reduced it by 50%, boom, credit score goes up.
mm.
Then you pay it off on before your next payment date. It shows, oh, again, credit score goes up. Now you're at zero balance, but you've manipulated it to get your credit score to go up twice. Whereas
Gotcha.
if you paid the $1,000 the one time and it's sitting at a zero balance for the next 3 months, it doesn't affect you positively or negatively. It's just zero balance, right?
Gotcha.
You're at where you're at. So
So then,
it's just a way to kind of manipulate the system.
if we're gonna play the manipulating game, I guess what is a good percentage to keep your balance at?
20% of the limit.
Okay, noted. I think
20% of the
that's a
limit
good
will
tip.
show. Yeah, it'll always show that you're managing your credit lines effectively at
Okay.
20%,
Now you
right?
mentioned in terms of getting a good credit score, you mentioned that there are a few ways: line of credit, your credit card, um, your car note or something. Do you need multiple avenues for your credit score? Because like for me, all I have is my credit card. I don't have
That's a
a
very,
line of.
very, very, very good question. What I always tell people, do the 2-2-2 rule. So you want two trades, whether it's a credit card and a loan or two credit cards, but you want two trades, minimum $2,000 for at least 2 years before you decide to go in and get a mortgage or apply for mortgage. Okay.
Okay.
So if you have one credit card, now my suggestion would be go get another one,
Hmm.
right? Just go get a MasterCard, get that to a $2,000 limit, put $10, $20 on it, and just let it ride out. Just let it ride out, ride out, ride out. The thing, lenders look at everything. So what the thing that lender will look at is, okay, Xavier's had this credit card. It's at $50,000. He's had it for the last 10 years. Why only one credit card? Why is his credit so thin? Is he scared to get more credit? Does he believe he can't manage more credit? So if he can't
Is
manage
that a
fifty
thing that
thousand
they
dollars,
would consider?
oh yeah, because you got to remember, like when you go to the bank, you're looking for over $500,000 in debt, right? So the lender's going to think to themselves, if you look like you're shaky handling 10 grand, 15 grand, 20 grand, why would we give you $500,000? You know what I'm
Hmm.
saying? Like, they need to make it make sense in their world. It may not make sense in our world, but it
Yeah.
has to make sense in their world. Do you get what I'm saying? And in their
So
world, it's like, go ahead.
for me, being on the road because I don't have an address and I can't apply for a credit card, I could call my bank and maybe get like a line of credit increase.
So you have a line of credit and let's say a credit card, those two things.
Is this is how much I am a professional at this. When what do they call it? Like, is it when you go to your bank and like they increase your overage limit or something? Is that a thing?
Yeah, no, no.
I sound like
So
an
what you're
idiot right
saying is
now,
like
don't
overdraft.
I?
Your overdraft. Yeah,
Yeah.
yeah. So your overdraft is a version of credit, not the one I would say you should use. So leave that
Okay.
alone.
Okay.
But for example, like what if you can, use a friend's address, use your
Hmm.
mom's address, use your aunt's address. Just use someone's fixed address, right? The only thing they need it for is just so they can send your mail to, right?
Yeah.
That's all they're gonna want it for. And even
Hmm.
then, now you can just be like, I don't want paper. I just want everything sent to my email, right?
But then if I have that credit card, I have to make a purchase with it, right? Or
Not
can I?
necessarily. That's my
Okay.
point. You don't
Hmm.
necessarily have to. You just want to see that you have at least two trades, that you're able to manage more than one line, right?
Okay.
More than one trade.
Okay.
Excuse me. Once they see that, they're fine. It doesn't need to be run up. It doesn't. You can literally have it sit there at a zero balance and use only the other card. Let's say you use primarily right now for
Yeah.
gas and food, and that's fine. And just leave the other
Okay.
one there just so they see that you can carry two.
Damn. Okay. So did I shoot myself in the foot because I had another credit card, but then because I got this credit card, which is a rewards credit card, so I use it all the time, I just let my other one expire and I didn't renew it. Did I?
No,
Was that
that's
was
fine.
okay.
That's fine because it'll once it doesn't show like it's gonna show expired on your credit report, which is fine, no big deal. Um, did you set yourself back a little bit? Yeah, you probably should have just renewed it and then just let it sit in your wallet.
Okay.
You probably should have done that, but that's fine. Like I don't know how it works, but you may be able to even call and be like, "Hey, look, it's been expired for a couple of years. I actually want it. Can I renew it? What do I got to do?"
Hmm.
And they would even have information on file. You'd be like, "Yeah, use all that. Yeah, use that information. Just send me a new card."
Hmm.
And whatever address they have on file, that's where they'll send the new card. Whoever tell them to ship it out to whatever wherever you're at, and then boom, do it that way, or even just get it shipped there. Tell whoever if it's let's say your mom or whatever, say, hey, look, the credit card's here. Give me the information, activate it, and then say, hey, put that in a drawer and don't touch it. Boom. You know what I mean? You
My
can even
mom
do
is
that
gonna
if you
look at
want
that
to.
card and just be like,
I know.
hmm.
I thought about that too. Mommy needs a new pair of shoes. That's what.
He didn't get me a Christmas present last year, so yeah, no, this will. Okay, cool. All right, so there's the credit score um bit. Okay,
Yeah,
so credit score, we come to you and you get us in the door with that first approval. Now, what are the next steps to look forward to?
of course. So you picked your dream house, you made an offer, it's been accepted, which is a hard thing to do in Toronto these days. You come to me, we get you the mortgage, we apply for the mortgage, we get approved.
Wait.
You
Why is
get
it a hard thing?
you
Why is
get
it
the
hard in Toronto?
it's hard to get offer accepted here just because there's so many competing offers, right? There's
Hmm.
so many competing offers on any property that you decide to make an offer on. It is really, really tough. I had clients of mine. They were, a new family, had a son is under one. I think it's about 8 months, and then a husband and a wife. They put an offer. They put in, I think, 7 offers that got declined by
Wow.
the seller until they actually got one offer accepted. And let me tell you how they got the offer accepted. They got the offer
Because they
accepted.
went to Oh My Mortgage. That's
That's one. And two, they had to write to the seller. They had to send the seller a picture of their child and say, hey, you're going, like this is going to be his first home. And they had to do a lot. And I think they actually,
wow.
it was an older gentleman. I think they made the older guy feel sorry for them. And that's how he accepted their offer. So it's hard
Huh.
to get an accepted offer. And you're going to have to go like if the property's at 500 grand, you're probably going to have to offer like 520, 525 to get looked at. You know what I mean? Like you're going to have to go above asking.
Okay, so this is where, again, my professionalism in this topic. So you go to the bank, you ask for a mortgage, and then you look for the house, or
Good
do you go
question.
to the bank?
So hmm. So as a mortgage agent, what I would suggest people to do is always come to your brokers, your mortgage agent, whoever it is, your mortgage professional first, and say, hey, I need a pre-approval. I need to know exactly what I'd be pre-approved at in order for me to go out and look for a house. Because one,
Gotcha.
it doesn't make sense you going and looking at $2 million houses when you can really only afford a $700,000 home.
Mm,
And two, once you know your budget and you go make an offer, one of the things that sellers like when you're putting in an offer is to say, hey, I've already been approved by the bank. Here's my pre-approval.
mm.
So whatever offer I put in, I can go firm. It's not conditional on financing because I am already approved.
Mm.
So that sometimes can be the difference between getting the house you want and losing the house you want, right?
Mm.
So I would always suggest to go to your mortgage professional, get the pre-approval. Once you have your pre-approval, find your home. Once you're home, you find your home, it's been accepted. You bring that purchase agreement back to your broker along with the pre-approval. We get you a real approval now, right? Essentially, all we're doing is we're adding the property
Yeah.
that you want to that application, and we're sending it to the lender saying, hey, he's found a property.
Hmm.
Once you get the commitment, you sign that, that's when the real work starts. So what happens after that is the lender will have a set of conditions on that commitment that you need to fulfill. Between you and the broker, have to work together to fulfill.
Hmm.
Those include everything from where's your down payment coming from, right? So your down payment normally needs to be in your account for at least 90 days, right? It needs to be a history of down payment. That way we don't know your down payment came from drug money or from Al Qaeda. Who knows, right? They need to see that.
Money is money. Like, you're
We would like to think so, right? So they need to see that history. They want to see your income, how you make your money, whether you're salaried employee, whether you work hourly as like a nurse or something like that, or you're self-employed or you're an independent contractor. And then based on how you make your money, they're then going to want specific documents to confirm that the income is consistent and that it's coming in, right? So for
Mm.
example, I believe you're an independent contractor, right? Is
Yeah.
that how you, okay, so I'm the same way. So essentially what they would look for is, we would be quote unquote, what we call business for self, right? So you'd have to have a HST number or articles of incorporation or a business license. The lender's going to want to see that. Then they're going to want to see your T1 general, right? So you file that with your tax guy. Check your T1 general so they can see exactly what you claim and break down how the money comes in. Then they're going to want to see your latest notice of assessment to confirm that you don't owe the government any taxes, right? They'll take all those things, average it all out on a 2-year basis. So they're going to want your 2 most recent year T1 general, your 2 most recent year notice of assessment, and then your articles of incorporation or business license. They'll average those 2 years, and let's say over the 2 years you made $120,000. Boom, that's the income they're going to use to qualify you, right?
So then
So
when you say that's the income they're going to qualify you, that means you're approved for how much?
So the best way the rule of thumb is you normally get approved for 5 times your income. So if you're making 100 grand, you'll be approved for a $500,000 mortgage. A $500,000 mortgage doesn't mean you're approved for a $500,000 house, right? Because you still have a down payment. Let's say, for example, you're approved for a $500,000 mortgage, but you're going to put down $300,000. Then technically, you can go look for an $800,000 house. Make sense?
So you have to already have the down payment?
Your down payment has to be secured prior to getting a pre-approval. So the first thing you need to do, the first 2 things anyone looking for a home needs to do is 1, ensure that their credit score is over 630 and they have the correct trades on file. And 2, secure their down payment. A lot of people come to me without any down payment and say, Kale, I want a house. I'm like, okay, that's great. Let's do it. How much you have saved? Nothing. It's 100% impossible to buy a home with no down payment. Okay. Anyone who gives you money is going to want to know you're also invested in this transaction. If you go in with $0 and they give you, X amount of dollars to buy a home, and one day you're like, you know what, I can no longer afford this. You can literally just leave the keys, on the kitchen table and walk out because you have no real interest in it, right?
Yeah.
Whereas if you say, no, I put in $100,000 down payment on this home, plus I borrowed $600,000 from the bank, I'm not going anywhere. You know what I mean? Like, I'm well invested in this property. And that's what lenders want to see. So a down payment is absolutely crucial. As a first-time home buyer, you have a one-time option or privilege of putting down 5% of the purchase price. Okay. I mean, if you can, I don't suggest that, but if that's all you can save, absolutely start with 5%. The goal is always to get your foot in the door. So you have your 5% down, you have your 1.5% of the purchase price closing costs. So if you're buying a $500,000 home, put aside at least, $5,500 towards your closing costs as well as your down payment. And then away you go from there, right? So your pre-approval, don't get it mistaken for purchase price. Your pre-approval will show your mortgage amount. Okay, your purchase price will be what you're approved for as well as your down payment. Add those 2 together, that's what the purchase price is. Make sense?
I knew absolutely none of this. Okay,
yeah.
So
it's
so
tricky.
now
It's tricky.
So going in, you already need your down payment. So then let's say say they don't have the down payment, but they have good credit. Are they eligible for a mortgage? I guess this leads into my next question of like, does a mortgage specifically have to go towards a home? Can you like ask for a mortgage and then put it towards, I don't know, crypto? I don't know, but like, you know what I mean? Where it's like, okay, I have a good lead on this stock or whatever, and I want to take out a mortgage and put that, like, is that a thing?
So what a mortgage really is, it is security against an asset.
Security against an asset.
That's right. So
break that down for me.
Okay. So your asset is the home.
So why is it against it?
No, that's what I'll explain. So your asset is the home. When I say security against it, what I'm saying is the lender is saying, I am willing to leverage your asset and give you this money, right?
Mm,
I'm giving you this money and leveraging your asset. I'm securing it against that asset. Okay. Now, a lender will always look at worst case scenario. So I'll explain it for this particular definition. Worst case scenario, they secure $500,000 against the asset you just bought, but
mm,
you do not pay it.
mm.
The way for them to recoup that $500,000 is to take your asset,
Yeah,
because now
gotcha.
they can liquidate that asset and recoup their funds.
Mm,
Let's put it with the example you just used, crypto. If they mortgage that, there is no way to secure those funds.
mm.
So it's impossible. There's no chance in hell will any lender say, here's $500,000, go use that good tip you got on crypto. Because if it went tits up, there's
Yeah.
no way for them to recoup their losses, right?
Mm,
And that's why the real estate world is the way the real estate world is. Everyone needs somewhere to live. So our house will always be an asset.
mm.
Always, always, always be an asset. And that's why a lender can always confidently secure money against it, because they know at the end of the day, if you don't live there, he will.
Yeah,
So I can always sell it to
yeah.
him and get my money back that you didn't give me. You get what I'm saying?
So mortgages then are specifically real estate.
Mm-hmm.
Mm,
That's it. Mortgages are only for real estate.
gotcha. I always assumed a mortgage was just a loan, but at a very ridiculous amount.
I mean, that to me is probably the best definition for it, because at the end of the day, if you go to the bank and say, I want a personal loan,
Mhm.
it's the exact same thing, right? But they would never give you $1 million as
Hmm,
a personal loan. There's no way. It's not
gotcha.
happening, right? But they would give you $1 million mortgage because they can secure it against your
Yeah.
$3 million house. You get what I'm saying?
But like, let's say I walk in with a 900 point credit score. Like I wouldn't be approved for that $1 million loan.
Never. Personal loan, never. It's
Interesting.
never in a bank's interest. That's too much money for any lender to give you to not have a secure a secured way to get their money back, right?
Gotcha.
The only way they would give you that loan is if you had $10 million in the bank. Then they'd be
Mm,
like, sure, we'll give you $1 million loan. Sure, because if you screwed up, we'll just take $1 million from your account. You get what
yeah.
I'm saying?
Yeah.
Either you're securing it with the volume of money you have in your account, or an asset such as a property.
Gotcha. Okay.
Yeah.
I feel like I've learned a lot, but I also feel like this is just the introduction to such a bigger world.
Yeah, it's huge. So you got to remember, real estate is so lucrative, right?
Mm,
That there are so many facets of it. There's so much you can do, right? Like you haven't even got into the refinance world, right? We're just talking about purchases,
mm.
right? So it's
Is that another
vast.
thing that you provide at Oh My Mortgages is like the
Yeah, yeah.
refinance?
So I do
Okay.
refinances for anyone, and refinances specifically are for people who are already homeowners.
Okay.
Right? Once you're already a homeowner, then you can refinance your mortgage, right? So you can, based on the equity that's already in the home, you can refinance your mortgage, pull some of that equity out, right? And then do what you want with it, right?
So for
So,
the people that are listening that don't know what refinancing is, because I obviously know what it is.
yeah, yeah, yeah.
Um,
I know.
what
I
is
know.
refinancing?
Of course.
So like what is yeah.
So Ontario, and I think Vancouver as well. I work in Vancouver a bit, but I know Ontario because I work
You're
with them a lot.
nationwide, right?
Yeah, so already everywhere from Vancouver right up to Newfoundland, I do it all, right? I can get them.
So there's no change. Now, how drastic of a change would all of these things be now to incorporate American law? Like
So yeah, so the American guidelines are, so first off, they differ from state to state, for one,
hmm,
and for two, in America versus Canada, just on a whole, is completely different, right? Such as like even little things like down payment. Like I think they have a program where you can put down like 3.2% or
oh
3.5% or something like that to buy a home.
hmm,
That don't fly here. You could never like
yeah.
that's not even an option here. So because again they have more people, they have more competitors, more companies. So, it's more competitive. So they have different things that they can do, or they work within their the rules and guidelines that they have to follow by law. It's totally different. So I can no way, shape, or form give advice, offer, assist, anything of that nature with any type of mortgage in the States, unless I get
Hmm.
licensed in a particular state. Yeah, totally out of my jurisdiction.
Oh, so
So
it has to be a particular state as well.
yeah. The licenses are per state. Licenses are per province in Canada too. I just have licenses in most of the provinces.
Oh, wow. Okay.
Yeah, yeah. So it's the exact same idea here, because there's little nuances in Vancouver versus Edmonton versus Ontario, and you need to know those nuances if you want to help people.
Yeah.
Same thing applies in the States, just on a bigger scale, obviously, because it's a bigger country.
Yeah.
Yeah. So yeah, that's totally outside my jurisdiction to help in the States. I couldn't if I wanted to.
Hmm.
But getting back to the refinances,
Hmm.
refinances as a simplest term is essentially taking the equity that's in your home and cashing it out to use for whatever you want, right? So the best way to look at it is, in lack of a better term, your house is a bank. Like, it really is your piggy bank, right?
Yeah.
You buy a house, let's say, for $100,000 today. A year from today, you put in, $5,000 worth of equity, so just paying your mortgage, and the area that you live in, the house values increased by 50% or
Hmm.
100%, let's say. So now that $100,000 house is worth 200,000, right? Your mortgage would be anywhere from 80,000. Let's call it $80,000, and you paid $5,000 in 1 year. So your mortgage is $75,000, and your property a year later is worth $200,000. Okay, so you have what, 160, 120, $120,000 of equity
Yeah.
sitting in your house. You can go to a lender and say, hey, I have an $80,000 or $75,000 mortgage. My house is worth $200,000. I have all this equity. I'd like to pull out $50,000 to, I don't know, take a trip, pay off some debt, buy a new car, and build a hot tub,
Hmm.
right? A lender will say, no problem. Let's do it. Now they will ask you to do an application, just like if you're purchasing a home. So they'll ask you to fill out the application. They'll ask for your income. They'll ask for, your mortgage statement, all the particulars. And once all of those things, are up to date, everything's in good standing, they'll say, here's $50,000. They'll literally, write you a check and hand you over $50,000, right? In its simplest form. And that is essentially what a refinance is. So you've taken that $75,000 mortgage that you had, you've increased it to 50,000, and that $50,000 you've increased it to, they're going to give you cash against your property. Make sense?
Gotcha. So
Yeah.
essentially, you just increased your mortgage.
You've increased
So,
your mortgage, but that $50,000 that you've increased it by, you're going to get that as cash,
and it just comes out of your house as an asset.
as an asset. You got it. You got it.
Hmm.
Exactly. Exactly. Or what we call equity.
And then when it comes time now, let's say you paid off your mortgage, like that $50,000, you've paid it off. So it's like that goes back into your house essentially.
Back into your house. That's right. So let's say you had the 50,000 plus the 75,000, right? So it's like
Mm-hmm.
135 or whatever it is. That's your total mortgage now. You have
Mm-hmm.
135,000 total mortgage. You won the lottery in a year. So you're like, I'm paying off my mortgage, and you've paid off that full 135. So now that 135,000 has gone back into your home as equity, right? Your house is worth $200,000. You have no mortgage because you paid it off with your lotto winnings. And now at any point you can say, hey, I want more equity, or I'm going to leave it as is. But essentially, that equity is now back into your home, and you have the ability to take out money again if you so choose to.
Now, does your home have to increase in value before you refinance, or can you refinance before the value increases?
Yeah, that's a good question. So technically, you can refinance at the value your home is. However, it really depends on what your current mortgage is. So let's
Mm,
say, for example, most lenders will only go up to 80% of the property. right? 80% loan to value is what we call it. So let's say your home for simplistic purposes is $100. The max mortgage any lender will give you is $80. Okay. Once you're at $80, the lender's not going to give you any more money until you can bring that balance down. Okay.
Or increase the value of the asset.
You got it. Or the value increases. You got it. Exactly.
Okay.
Precise.
Okay. Cool.
Exactly.
All right. So mortgages, refinancing. What else is Oh My Mortgage up to in terms of services?
Yeah. So in terms of services, we do everything with respect to exactly that: purchases, refinances, private mortgages. Those are mortgages that just don't go through a traditional lender. It's usually somebody who, has access to funds and are willing to lend them out at normally it's a higher rate, just because mortgages that come to a private mortgage are usually a little more risky. Okay, in terms of
Because
the person may have bad credit, the person may not be working, the person may
mm,
be behind in property tax, the person may be behind in income tax, right? Those
gotcha.
things. Lenders see those kind of derogatories, we call them. They don't want nothing to do
Oof,
with them.
that's a
But
word.
right?
Derogatory. Yeah.
Right? I
Okay.
know. That's why it even sounds bad. So lenders don't want nothing to do with that. So what they'll do is they'll pass that on to a private guy, a private lender, who will be like, "Yeah, we'll do it, but we're going to charge you the world to do it," right? So
Wow.
I
Okay.
work with those type of lenders, and they
What's
have
like
it
what does an interest rate look like for a private lender?
to be like 9%, 10%.
Ooh.
Yeah, and in some cases it helps people, right? Because I had a guy, he was back tax $156,000 he owed to CRA, and they were on the verge of taking his house. So
Mm,
like, listen, like we put the lien. Oh no, we don't want nothing to do with this guy. Like he needs to figure that out on his own. But my private guy was like, look, he has equity in the property. We'll give him a private mortgage. We'll pay this out for him, and then he'll just make monthly payments on my mortgage, which is what he did, right? So he was able to keep his house. He had another payment, but he's able to keep his house, pay off the government, and away he went from there. So
mm.
it does have its advantages depending on your situation. And that's what mortgages is, in a sense. Is whether you're purchasing, whether you're refinancing, it's all based on a person's situation, where they are, where they are currently in life, what they're looking to achieve, what the current goal is, what the future goals are, things of that nature. So that's what all depends on. But back to the services of what I do. It is, like I said, private mortgages, it's refinances, it's debt consolidation, it's credit counseling, it's credit repair, um, first-time home buyers, privileges. I help with all that. And then, yeah, that's essentially it.
What kind of
Uh,
privileges?
so with your land transfer rebate, I help with that. Uh, the
I'm
5%.
sorry, you're what? Your
So when you buy a home, you have to pay a land transfer tax.
land transfer tax. What?
Land,
Okay.
yeah, it's crazy, right?
What
It's
is a
crazy.
land? What is this
The
tax? This new
municipality
tax. Okay.
charges you to come live in whatever. So if you decide to come live in Durham, Durham's going to charge you for come living here.
Hmm.
Okay, Durham's going to say, oh, you bought a nice house in our municipality, on our land. Wonderful. This is how much it's going to cost you to come on over.
What?
Come on over.
Okay. Okay.
Yeah. So usually your lawyer, because you have to complete all mortgage transactions with a lawyer. Your lawyer will give you that amount, what that land transfer tax amount is,
So
and
then
yeah,
you put people in touch with a lawyer, or you take on that.
yes, I do put people in touch with a lawyer, but we can rebate it for first time home buyers, right?
Okay.
We can have it rebated. So I help
I
you
know
with
what
that.
that is.
I'm good. We're getting somewhere. We're
Yeah.
getting somewhere. But you can have that amount rebated to you as a first-time home buyer. That's
Okay.
one part of the privilege. Yeah. So you can do that. And
Does it have to be a first-time home buyer in that region, or like, let's say I buy a
first
home in
home buyer,
Vancouver?
period.
Hmm.
All of Canada. So if you buy a house in Vancouver tomorrow, you can't be called a first-time home buyer in Ontario, right?
Oh,
You're first-time home buyer across Canada. Because
what? I guess, yeah. What makes you?
first-time home buyer, the privilege is Canadian government regulated program. So
Hmm.
they're the ones who started this fancy program. So they they uh, they oversee it nationwide, right?
Mm,
It's not on a provincial level; it's national. So that's essentially why they're the ones who came up with the program, the federal government. So they're the ones who say, yeah, it's federal regulated. It's not provincially.
okay.
Yeah.
Now, in regards to like being a first time home buyer now, over especially the last few years, the term has been tossed around a lot where it's like, what does it mean to be living in a renter's market then?
So right now, because it's harder to buy a home, right? Prices are high. It's hard to get an accepted offer. Interest rates were a bit higher, not so much now, but they were high. So people are like, I'm not buying, I'm just gonna rent.
Hmm,
So we found more people were trying to rent. As more people are trying to rent, it just makes it harder for a renter to find something that they can afford, right?
okay.
So when you move somewhere and you could start off paying $1,000, the next year the landlord can either bump you up, right? I think they can do it by 20%, or they can say, look, I'm not renewing you, right? We did a 1 year lease, you gotta go. You leave, and he just re-advertises the property at $1,500, and he'll find someone to come in at $1,500 to live here because people are desperate to live somewhere,
Yeah.
right? So it's really, really tricky for renters right now to
Hmm,
find somewhere that is affordable and that is consistent, just because of how the market is going, right?
okay.
The buying and selling of homes um, dictates how the renting of properties is going to go,
Okay.
right?
So to say it's a renter's market, that's not a positive thing then.
To see, I wouldn't call it a renter's market, because when you call it a renter's market, that means the renters have the leverage.
Yeah.
Renters don't have the leverage right now.
Okay.
Absolutely, right? The landlords have the leverage. They're
Gotcha.
the ones that are able to dictate the pace, not the renters, right?
Hmm,
The only, again, when it's a renter's market is when um, properties are, it's not as competitive to buy homes. So
hmm,
everybody's like, I'm looking to buy a home. Then landlords who have rental properties say, well, I need someone in here. So, I'll lower the rent. I
mm,
will give incentives to come live here, things of that. Then it's a renter's market. But in
gotcha.
Toronto, there's no. And it won't be a renter's market anytime soon.
I
No.
completely misconstrued that saying that because like I
Yeah.
thought like renter's market meant it was more of a permanent term where this place is just so expensive to live, it'd be cheaper to rent. But then
No.
okay, yeah, I fucked that
No.
up.
No. Hell no. No. It'll always be cheaper to buy than to rent in the long run. It'll
Mm,
always be cheaper to buy,
mm,
right? But again, the tricky part for people is the down payment. That lump
yeah,
sum to buy a home is tough. It's easy to fix your credit, bro. You can fix your credit in 8 months, no matter if your score is 430. Doesn't matter.
yeah,
I can fix that for you in 6 to 8 months, I swear. But can you raise 30,000, 40,000, 50,000, $70,000 in 8 months? Probably not.
mm,
The average person can't really do that, right?
yeah,
So they have no choice but to go, okay, well, fuck, like who's renting? I mean, what are the rent prices? But
mm,
like if I'm renting, like let's say I'm renting in Durham. If I'm renting in Durham, if I'm renting here, let's say at a townhouse, and it's costing me 3 grand, my neighbor who's bought is only paying maybe $1,500, $1,600 for his mortgage,
mm,
right? The renter's going to, because remember the guy who owns the property that I'm living in, he pays $1,500 for his mortgage, but he needs to make a profit, so he just
yeah,
doubles it, right? He goes, I'm paying $1,500 for my mortgage. I'll charge him 3 grand,
mm,
so he can pay my mortgage, and I still make $1,500. Get what I'm saying?
gotcha, yeah, yeah, yeah.
So it'll always be cheaper to buy.
Hmm,
Always be cheaper. You're more in the long run. You'll always
yeah.
be cheaper. Always. Yeah.
Now I was looking for property to buy before I decided to embark on this endeavor of living on a truck.
Yeah.
And I saw like there were two different prices. There was a price for, I can't remember what the term was, but then there was a price for people who wanted to buy the place, and then there was another price for renters, like to buy the place with purpose to rent.
So like a rent to own kind of a thing,
Yeah,
or purpose to rent. So like investors and then people who want to actually purchase.
yeah.
And is this in Vancouver?
I want to say that it was like Toronto condos, like down on like King Street or whatever, where it was like, okay, if you want to live here, it's like $400,000, or like, no, if you want to live here, it's like $700,000. But then if you're gonna buy it with the intent to rent it out, it's like $400,000 or something like that.
Mm.
Is that a thing, or like did I just
No, it shouldn't be.
misread?
Yeah, I think you misread because I think that's illegal. I don't think you could do that, right?
Mm,
And if that's the case, like I would always lie. Like I'd be like,
yeah,
yeah, I'm renting it out. Like I
yeah,
know I
yeah,
would, right? So it's not that's not a thing because people will just find a way to get the cheaper price, right? They'll just lie.
yeah.
They'll do whatever they do, right? So no, it's not. That's not a thing. That's not a thing.
Gotcha.
What you may have saw possibly is um different phases, different floor plans,
Yeah,
different areas within, let's say, a condo complex. All that can change the price of a property,
yeah,
especially down by the lake. Because if you have a house, if you have a unit that is facing the water, that is a 3 bedroom, that is 1,100, 1,200 square foot, you're paying 700,000.
yeah,
But
yeah,
if you have, a studio apartment on the third floor that's facing Spadina, then you're probably paying 400,000, right?
yeah,
So
yeah.
that could, it maybe something like that you may have saw
Hmm.
possibly, but that's usually only time you'll see like a price range is just based on the properties themselves.
Oh,
Yeah,
so private lending, refinancing, mortgages, first-time home buyers, line of credit repair.
yeah, credit repair.
Um, what else? What else do you provide Christmas parties? you, you're covering everything here.
I can be your MC I can do that too as a cost. Everything's for sale, even me. No,
That's funny. So
yeah,
then, okay,
anything to do with the credit world, the mortgage world, I can absolutely assist with. And that goes from like, again, like we said, there's a vast, it's a vast kind of topic sort of a thing. So everything from appraisals, people sometimes need appraisals, inspections, that's something that I can provide. I can assist with home insurance. So when when you buy a home, you have to have home insurance. I can help with that too.
hmm,
So how I've how I've structured my business is I want to be the person that alleviates the stress of the entire process.
hmm,
Okay. And that's everything from exactly that, knowing what you can afford, right down to the money hitting your account and the lawyer handing you the keys. Right. I assist the entire way. Right. All the small things, all the nuances, all the major things that need to get done, I assist with them all. So I'm very hands-on with my client in that respect. I want to ensure that, again, the people that I normally deal with are like us, are people who don't understand the process or just getting into the market or misled with information, things of that nature. So I really make sure that, I, hold people's hand throughout the process, that I educate them throughout the process, that I fix uh, things on their credit report, derogatories on their credit report, misinformation on their credit report to help them as they move forward, right? Because this is
hmm,
something, once you buy a home, it's something that you're going to continuously have to stay on top of for the life of you, right?
yeah,
So it's something that I ensure I try to set people up in the right direction. And then again, I'm always there when, okay, you know what, my daughter's, my daughter's made it to university. I need $60,000. Can you help me refinance my home to get it for her? Sure, let's do it.
hmm.
Or yo, I checked my credit report. I had an 800 credit score last week. Now I have 600. Can you do a credit investigation
Is that
with
a
Equifax?
thing?
Yeah, that's a thing. Of
Damn.
course, that's a thing. Yeah, yeah, and that can happen much easier than people think. And I do credit investigations, have that repaired in 24 hours if there's something to be repaired, right? If there's a problem there, right? those are the things that I do for my clients, right? Again,
Mm.
it's from front to back, A to Z, right through. Just because, again, I understand it, I get it, I know how hard the process can be.
Yeah.
So it's important for me to do as much as I possibly can to help my clients.
Now, can I get a mortgage or do I approve for a mortgage if I wanted to build a house? Is that?
Of course, of
Hmm.
course. Now that's a different type of product. It's called a construction mortgage. Now you'll have to have a certain amount of money already on hand to build a home.
Hmm.
When you're building a home, a lender's going to ask you to assume more responsibility than if it's already a standing structure, just because things can go wrong, right?
Yeah.
Things can get delayed. Things can just kibosh altogether. So a lender's not going to say, oh, here's 95% of whatever your projection of what the house costs. The
Yeah.
lender's going to be more like, here's 65%
Hmm.
of what the house costs. You come up with the 35, build your house, but right, that sort of thing.
Gotcha.
But yeah, I do have lenders who provide construction mortgages, give you the money you need to build your home, and kind of do your thing that way.
Now, let's say I wanted to start a business. Would a mortgage approve in that aspect as well? Like if I
No,
wanted to, okay.
what we would do, like for example, I have a lady. She does security intelligence or whatever, right? Whatever that thing's called. So,
Hmm.
anyways, she wanted that money. Her business was going fairly well. She wanted to ramp it up and kind of get more clients, but she needed money to increase her infrastructure and
Yeah.
whatever technology stuff she needed. So she wanted money for her business. Now, instead of, well, I don't have the option of saying, okay, here's $60,000 against your business. What I said is, your property has $500,000 worth of equity in it. Let's pull that money out. We'll cut you that as a check, put that in your bank account, and then do what you need to do to, get your business where you want it. So
Gotcha.
that's what I can do, right? It has to be,
Okay.
you have to be the homeowner. We can leverage the equity in your property, which
Mm.
you can then sink into your business. But can I give you a mortgage directly against your business? Absolutely not. No
But
way.
like maybe not so much against the business, but let's say I have a business and now I want to establish it at a brick and mortar and I
Hmm.
want to buy this building
Uh-huh.
and then a mortgage would then apply in
Yes,
that aspect.
absolutely.
Okay.
Absolutely.
Gotcha.
And in that particular case, so that's what we would call a commercial mortgage, right?
Mm.
Residential is kind of what we're talking about because most people,
Yeah.
that's where they start. But let's say you want to buy exactly that, a brick and mortar in a plaza, for example. We could definitely do that. And we can do it against the business. So
Mm.
the applicant would be your business. The
Yeah.
credit would come from your business.
Yeah.
The income would come from the cash flow of the business, right? Everything would be run through the business. We can do that.
Gotcha.
Yeah,
So that's also an Oh My Mortgage thing.
you
Sweet.
got it. Or mortgage can do that too, for sure.
Dope, 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 man. Is there anything I missed that you want to talk about when it comes to Oh My Mortgage? Like, it seems like there's so much going on that you need to
Uh,
just share to all of
I
Canada.
I would love to, Canada. No, I mean, for the most part, the most important things is kind of what we discussed. I don't want to overwhelm people because it is an overwhelming topic,
Mhm.
but it's important for people to understand that the mortgage process can be daunting, but doesn't need to be.
Mm.
Um, Purchasing a home can be, a convoluted process, but doesn't need to be, right? Get the right information, work with the right agent, whether that's me or someone else for that matter, work with the right agent and move methodically through the process, and you will get it done fairly easily, right?
Yeah.
Fairly painless. So, that's kind of what I think the message I want to get out to people today is, um, be aware of your credit. Make sure you have a handle on that. Make sure that you have a handle on your finances. That's very, very important as well. And yeah, and then once you think you're ready, reach out to a mortgage professional and let them guide you through the process because they're the ones that have been doing it for, years, have done hundreds, maybe even thousands of deals. So they're the ones that, they can guide you on the nuances that maybe you're not, Google's not can't tell you. You know what I mean?
Yeah. Yeah. Yeah.
Yeah.
Sweet. Awesome. Well, Mr. Olivier,
Yes,
thank
sir.
you for coming in and helping this out. Because yeah, like with this podcast, trying to get some professionals on here as well to shine light on a different aspect and not just because people want to learn as much as they want
For
to hear people just banter back and forth. Like they also want to learn stuff. So
sure.
super thankful that you're able to make the time.
For sure, man. Absolutely. It was absolutely a pleasure. And any way I can help, absolutely give me a shout. Anyone out there who has questions, again, you know what I mean, give them my information. I'd be more than
Yeah,
happy to answer anything anyone has.
put that all in the
And
description.
yeah, man, yeah, man. And you enjoy your road trip.
Yes, sir.
I can't even imagine what that's like. But I hope you're enjoying it. I hope it's an experience.
Well, like you're getting the inside scoop in the group chat.
I know. That's what I'm saying. Yeah, yeah, yeah. So I commend you. I mean, it's going to be a heck of a book. I can't wait to read it.
Oh
I
man,
can't wait to read it.
it's all
I can't.
you're getting it chapter by chapter. So,
Yeah, I
uh,
cannot wait. So
awesome.
enjoy it,
Well,
brother.
we'll
It's
do.
been a pleasure.
Peace out, brother.
All right, brother. Take care.